Just Word podcast, we often talk about investing. We talk about stocks. We talk about bonds. We don't often talk about real estate and, in particular, rental real estate. So, Stephen Anders is a real estate investor. He's a business coach, founder of Sorex Consulting, and also an author. The New American Dream, a simple roadmap to purchasing investment properties. And he's coming up right after this word from our sponsor. The Just Word podcast is brought to you by Justwealth Financial. Money Sense magazine ranks Justwealth as the best robo-advisor in Canada in 2024. And the Globe and Mail says that for the third straight year, Justwealth had the highest 5-year after-fee annualized total returns for the growth portfolio. Justwealth, investing the way it should be, just for you. Stephen, a real pleasure to have you on the show.
Absolutely. Thank you so much for having me.
People don't often talk about investment properties, and you got into this about a decade ago or so with virtually no money. How'd you do that?
Absolutely. So my journey started over a decade ago. I was raised by some great parents, and they had a business of their own, and so they instilled kind of entrepreneur mindset at a very young age. And when I went to High Point University, I took a real estate class my senior year, and just fell in love with real estate. And so I knew I wanted to get into real estate. Was too scared to get into it, the fears of doing something new. And luckily I was able to link up with a mentor named Joel that's still my mentor to this day. And he kind of really helped ease all those fears. But to your point, I didn't have any money. I was $75,000 in debt, most of it student loan debt. There was I made a great financial decision as a 22-year-old to buy a brand new car. That's such a great investment. And so I was making $45,000 a year, so I didn't have a lot of money left over at the end of the day. And Joe was telling me, "Hey, all you got to do is just figure out a way to get that down payment." And how I did it was I had a credit card. Now, before people say, "Oh gosh, a credit card," back then it was 7% interest if you got a cash advance off the credit card. So much different landscape today than what it was then. But that's what I did. I took a cash advance off a credit card, and that was my down payment to buy the first property. And I bought the worst house on the block, and that's been my investment strategy all 10 years I've been in this business, because there's just so much more upside to it. And so then I took another cash advance off the credit card and fixed the property up. So now it's one of the best on the block. And then I refinanced that property with a bank and pulled out my working capital and paid the credit card back off and rolled the extra working capital straight into another property. And so I've just done that hundreds of times, and worked quite well for me.
Okay, that's a great success story, but the key to it all at the beginning is getting a good deal on the price, I would think. So, what do you do? What do you research to look into what's a good deal?
Absolutely. So there's several different ways that I evaluate a property. For one, I don't want to buy the best house on the block just because the upside isn't going to be where I want it. I want to buy the worst house on the block. I want to see cosmetic issues potentially. So when you go and you look at it, there could be broken windows, there could be a few holes in the wall. It might need new floors or carpet, LVP, but all that stuff can easily be done, and you can get that stuff done pennies on the dollar compared to if you bought the best house on the block. You're paying somebody else a lot of money to make those repairs. And so that's how I really evaluate properties from a condition standpoint. The next is the numbers. How much is it going, or how much can I get the property for compared to how much can I fix it up for, compared to then how much is it worth, and then how much can I rent it for? And so I always run those numbers. I tell people, don't buy a property and rent it out just to say you're in a rental property. It needs to make money, because it's a long-term hold. So you're not just holding a rental property for 2 or 3 years. You're holding it potentially for 10, 15, 20, 30 years. And if you're not making any money on it while you have a payment or have a loan on it, you're really going to get burned out. And so run those numbers conservatively. And if you run them conservatively, then if the market takes a turn or it tanks or whatever the case may be, you're going to be fine because you ran it based on worst case scenario, not the best case scenario. And I think if you do all that, you'll be in a much better position when you're buying rental property.
I'm a little surprised that you say try to always make money on your rental because doesn't it make sense to just break even on the rental if you're pressed? Break even on the rental because the price appreciation will bail you out over time. And if you're looking at 10 years, it probably works, doesn't it?
It does. It does. And for me, I just didn't want the minimum, right? So, for me, I wanted to create something that I could live on, but then I also made money over time because it's appreciating. And for me, I looked at it from the standpoint, I want my business almost quote unquote recession proof. And what I mean by that is if I evaluate everything up front based on worst case scenario, well, I'm buying properties based on worst case scenario. So if I ever hit worst case scenario, I'm still making some money. But you're right. You can easily still break even at the end of the day, and it's still going to appreciate over time, and you're still going to make money over time once you sell the property. But I wanted to make some along the way too, just because it's just so hard to, from a mindset standpoint, that you break even month after month and sometimes you lose sight of, okay, 10 years from now this property is going to be worth way more. And then a lot of people say, you know what, I've had enough, I don't care about 10 years from now, I just want to get out of it because I'm not making anything now. And so it's more of a mindset thing for me.
Psychological. Okay, financing. You started off when rates were low. Have things changed significantly in the way you would advise people?
Absolutely. I think back 10 years ago, and some of my rents have doubled and tripled in 10 years. And I've even seen rents double since the pandemic happened over the last 2 or 3 years. Which some of that doesn't make a lot of sense, right? Why rents would be doubling during a pandemic, but they have. And so I do evaluate things a lot differently now. Even the financing landscape is a lot different now. Interest rates are a lot higher. Banks are a little bit more conservative of how they lend money, but then there's also so many other avenues out there that you can get financing from hard money lenders to seller finance and to just kind of more creative deals that allow you to get into this great business called real estate a lot easier. And so for me, it still goes back to the numbers thing. I know a lot of people right now are so asphyxiated on the interest rates and what they are, but for me, I'm I'm okay with a little bit higher interest rate as long as I'm still making money, right? Because at the end of the day, the way I view real estate, it's the only thing in the world that allows you to use someone else's money, someone else pays your mortgage, and someone else pays you money on a monthly basis, and you make money over time because it appreciates. And there's nothing else in this world that allows you to do that other than the stock market, right? But you actually have to have money to get into the stock market. Where real estate, you can use someone else's money.
Yeah, that's always a bit of a risk. The other risk is the rental side of things. And tenants, I think, would be a problem or something to look into. How do you get a good tenant? How do you know?
Absolutely. You have to create some standards for yourself. So I learned this lesson a long time ago where when I first got in the rental business, um, I'm a nice guy, so I got a big heart, and you hear these stories, and they've affected people's lives, and you want to give somebody a second chance, and sometimes it works, sometimes it don't work, right? So lesson learned there. Now I have standards, right? So for me, you have to have a minimum of a 600 credit score. You have to make 3 to 4 times the rent in income on a monthly basis. You can't have an eviction in the last 3 to 5 years, and we evaluate those evictions on a one-off basis. So is it an eviction because you tore the property up? Is it an eviction because you didn't pay rent? Isn't an eviction because your landlord is just selling the property and you had nothing to do with why you were being evicted? You were actually a good tenant. We evaluate all those separately because they all have their own merits. And then we look at rental references. Be sure don't get a rental reference from a family member or from a friend. Because people they sometimes lie about that stuff, right? They elevate their friend or family member more than what they should have been. So we always look for an ex supervisor. We call your past work experience. We call you a previous landlord. We want to know everything that we can possibly know about you so we can make the best decision, and reward you if you've been a great person, if you've done everything wrong. But unfortunately, if you haven't done everything you need to do, then, we won't rent to you.
Steve and I have 5 children. And when I had the first one, it really didn't change our lives, my wife and I's lives. We would take the baby to the restaurants and go out and so on. Once we had the second, it changed our lives. And then we went from there. But you've done the same thing with housing. You've got one, and now you've got hundreds of properties. How do you stay organized?
Absolutely. You cannot manage five properties the same as what you manage 100 properties,
Same
right?
as
You
children.
can't manage, right? You can't manage five with 50, the same way. And so you're right. You got to be very organized. And for me, a year ago, I took my property management company 100% virtual. So I got virtual assistants, I got virtual managers that manage everything. We did away with the actual brick and mortar building. And so we just rent that out. And so now everything's virtual. And by doing that, we became so much more organized. And so we use a rental management software called Rent Ready. The founder of that was a landlord, and he wanted something that was inexpensive, and he wanted to be able to help people and share that with people. And so that's the one we use. There's some that are far more expensive and gives you all the bells and whistles that you need, but I highly recommend, whether you have one property or two properties or 100, get some sort of rental management software, because tenants can pay on the via the portal. They can submit service requests through there. You can rent the properties through there. It's so much easier to do background checks and credit checks, and you're just more organized. You have a software. My software, I have it set up for every time you're late on rent. So I rents late on the 5th. They'll get an email or a text every day that they're late. And so instead of me having to pay somebody to call people, I have a rental management software that's doing everything for me. So it's almost like an additional team member. So you got to stay organized there. You want to have a great filing system. You want to be organized with your maintenance and your insurance, and make sure you get pictures before somebody moves into your unit, and have all of that stuff organized, because the way life works is you're going to need that stuff when you least expect it and when something happens, right? So you don't have a ton of time to go searching for a bunch of stuff. That's why you have to be organized up front.
Okay, the stock market can return over time on average something like 8%, depending on whether you're in Canada, the United States, those kinds of things, but it's a good rough number. In the rental industry, what kind of returns can you expect over time? And I'm not asking you to reveal your margins, but what would it look like?
Absolutely. They range. We have right now here in the market, here in the States, there's certain markets that people are only getting a 1 to 2% return because they bought it at such a high price. And so for me, I didn't buy anything at a high price. And I still, to this day, even with real estate being as high as what it is, I stay away from the super high stuff. And so sometimes you got to go into smaller towns or and stay away from your bigger cities to be able to get that better deal. But I want 8 to 12% return on my money, and I've gotten that. Some of my deals I'm getting 15 to 20%, and it just depends on what you buy it at. And so I tell people, you don't make money on real estate on the sale, you make it on the buy. And so what I mean by that is, if you get a good enough deal, then your payment's going to be lower, your margins are going to be better, and then over time you're going to have way more equity in the property. Because if you bought high, well, that's the one thing that you cannot change in a property is what you buy it for. And so, just say for example, you bought a property at 50,000, and that's low, and it appreciates to 150,000. Well, you're going to be great. But if you bought that same property at 100,000 and only goes to 150,000, well, your margins are starting to get a little bit tighter. And so you want to make sure you're buying things the correct way and getting a good deal, because the deals are still out there. It's the same way when you buy a car, right? You don't go buy the first car you see. You want to shop around. You want to make sure you're getting the good deal. And I anticipate and I tell people that's what the same thing you need to do with real estate as well.
Yeah, and that goes back to the beginning of our discussion. Get a good price in the get-go. Also, at the beginning of the discussion, I mentioned that you're the founder of Sorex Consulting, and you've got a bit of a contest on. Tell me about that.
Absolutely. So it's kind of all come for full circle for me. When I first got in this business a decade ago, I had a great mentor, Joel, that's still a part of my life, that's still mentoring me to this day. And I wanted to start giving back. And so I wrote this book called The New American Dream, A Simple Roadmap to Purchase and Investment Properties. And it's been great. It's hit bestseller list. And it's just been such a blessing and been able to help people. And so I wanted to do something even further, a bigger extension of that. And it's called Sorex Consulting, where I help people, that next generation, get into real estate. And I meet people where they're at. And whatever that looks like, you've never bought a rental property to you've already gotten 50 rental properties, whatever that looks like. We have a course in the book that really helps people know how to do this business. But to your point, we just started a giveaway at Sorex Consulting where we're going to give someone a chance at winning a $500,000 to go towards real estate.
Whoa.
And so it's just been a ton of fun. There's several different ways to get into it. Obviously, there's free ways to get into it, but then also you can get into it by purchasing products on the site. There's some T-shirts on there. There's the books or the course. For every dollar you spend, you get entered one entry for every dollar you spend into the giveaway. We're also going to give away $1,000 every month starting in June. And so every single month we'll give away $1,000 to help go towards your real estate dreams and admirations as well. And then come January will be the ultimate giveaway. We'll draw a person's name and we'll fly them in here to North Carolina and then we'll play a game and they'll have a chance of winning $500,000. So it's just been a ton of fun. We want to raise kind of awareness of real estate and what real estate can do for people. But then I think about my own journey. I didn't have a ton of money to get it into this business. So what better way to give back is to potentially give some money away to help somebody get into this business. So, if anybody's interested in it, you can go to sorexconsulting.com or shop.sorexconsulting.com as well. We're also on Facebook and Instagram. If you search Sorex Consulting, you'll find us there. And just really, really excited about the months to come.
Even I'll leave the link as well. Thanks so much for your time. Great story.
Absolutely. Thank you so much for having me.
Stephen Anders, author of The New American Dream, A Simple Roadmap to Purchasing Investment Properties.